Good morning, everybody. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you all for joining us for our special session today on our breakfast meeting. It is Friday, the 3rd of September, 2021. As always, this meeting is being recorded and the audio file may be shared with third parties. The meeting is also being broadcast live on our Vetiva online page on Facebook and is set to last for 30 minutes. Over the course of the meeting, if you do have any questions as the speakers are giving their presentations, you may drop your questions in the Q&A box and we will attend to them after all speakers are done. On our agenda today, we'll get a quick recap of yesterday's capital market activities from Symbiat from our global equities desk and Omorige, who will go through fixed income and currencies. Following that, we will get a presentation from Frontier Africa Reports with their own updates. And after that, we will be having a special session with Mr. Deji Adebusiye, who will be talking about food security feeding 200 million people. Without further ado, we will now start off with Symbiat from the global equities desk. Good morning, Symbiat.
Good morning, Dozie, and good morning to everyone. So like you mentioned, I'll be doing a quick review of the performance of yesterday's markets across West Africa, and I'll be starting with BRVM. The composite index recovered after the negative close on Wednesday, gaining 36 basis points to end the session. Stocks like Crown CM, Cote d'Ivoire, Tractafic, and Silver Abidjan all recovered from the loss on Wednesday, while we saw increased demand in the telecom space, which helped lift market activity. Onatel recorded highest volume of traded shares, followed by ETI and Sonatel Senegal. So for the last trading day of the week, we expect market to close the week slightly positive, barring any major sell-off in the large cap names. Over in Ghana, the composite index closed slightly positive, up by just 1 basis point. This was on the back of a 0.98% price appreciation in Enterprise Group Limited. And this was the sole gainer in the session. The market also saw improvements in activity level on the back of a 1.24 million trades in Cowbank. Going into today, we expect the market to close the week slightly positive like it's been doing over the last couple of sessions, while market activity reverses back to lower level. Like we've always mentioned, for any of our listeners looking at exposure into any of these markets, they can reach out to us by sending an email to dealing@vetiva.com or to our sales team at sales@vetiva.com, and we'll get back to them. Finally, in Nigeria, the market closed positive for the first time this week, as we saw all share index advance by 17 basis points. This was due to improved sectoral performance yesterday, where we had counters across board gain points. Julius Berger and Danksem both closed up, lifting the industrial goods sector by 44 basis points. The banking index as well gained 19 basis points due to increased demand in tier 1 counters like Access, UBA, Zenith, and GT. All the 4 stocks accounting for 50% of total turnover. Market activity also improved significantly, recovering from the prior lower level, as we saw volume and turnover increase by about 54% and 40% respectively. Going into today, like I mentioned earlier, the market saw increased demand in the tier 1 banking names, especially in Access, which of course was on the back of the impressive half-year results and the 20% increase in interim dividend from the previous 25 kobo to 30 kobo per share. We expect this short-term enthusiasm to persist in companies that deliver better than expected results as investors take position. And for companies like UBA, GTB, Stanbic, Fidelity, they are still awaiting regulatory approval from CBN on their half-year results. Thank you, and that's all from my end.
Thank you, Symbiat. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, Dozie. Good morning, everybody. System liquidity declined slightly yesterday to open at 431.8 billion positive, coming from the 432.6 billion positive that was recorded on Wednesday. However, money market rate declined by an average of 17 basis points on the back of FS retail refund that came into the system yesterday, as OBB and overnight rate closed at 4.5 and 5% respectively. For today, we expect interbank rate to trade at higher levels as players make funding provision for a possible CRR debit and FS retail auction that is happening today. The parallel market lost about 2 naira yesterday to trade at 530 naira to $1, while the earning window opened at 411.78 naira to $1. The highest trade that was recorded yesterday was 413 naira to $1, while the closing rate was 411.67 naira to $1. Brent and WTI lost 0.2% and 0.3% to open today at 72.9 and $69.75 per barrel respectively, ahead of the highly anticipated US monthly jobs report. The T-bills market recorded another active trading session yesterday, with activity skewed towards the special NTB and the long-dated maturities. The OMO segment traded on a relatively quiet note, as attention was largely on the OMO auction that had yesterday. At the OMO auction, the CBN sold a total of about 50 billion from an offer amount of 50 billion, while keeping marginal rates constant across the three tenors at 7%, 8.5%, and 10% respectively. The bonds market continued to trade on a quiet note, as we saw interest skewed towards the 2028, 2036, and the 2049 papers yesterday. Overall, average benchmark rate declined by about 2 basis points to close yesterday at 11.61%. The Eurobond market traded on a very active move yesterday, with buy-side interest in on the Nigeria 2031, 2032, and the 2038, while we also saw some sell-offs on the corporate space on the Access and EcoBank Eurobonds. For our expectations today, we believe that the current sentiment in the bonds market will persist as players continue to cherry-pick attractive offers across the benchmark curve, where we expect the T-bills market to trade in line with system liquidity. That will be all for fixed income. Thank you very much.
Thank you very much, Omorige. We will now move to Justina from Frontier Africa Reports and their updates. Good morning, Justina.
Good morning. Good morning, everyone. We start here from East Africa, where Kenya's National Treasury has given the Capital Markets Authority the go-ahead to oversee all investment funds formerly solicited from the public. The approval is in a bid to curb fraudulent and unregulated schemes. In the Southern African region, we have the fashion retailer Truworths, who is reporting a 26.8% increase in annual profits. That was yesterday. And he also declared a final dividend, cash dividend of 118 cents, up from 31 cents in 2020. And in the North African region, we have Afreximbank yesterday reported and gave a report of its first half 2021 results. The bank reported a 12% increase in net income to $168.19 million, while its net interest income increased to $329.9 million. In the same period, the bank launched a $22.6 billion paid-in equity capital raise, expected to be fully implemented by December 2023. And in the West African region, we have the African Development Bank, International Fund for Agricultural Development, and the Islamic Development Bank, who are mobilizing $520 million to co-finance Nigeria's first phase of the Agro-Industrial Processing Zone program. And this program has the full backing of the government, both at the federal and state levels. And that's all. That's some of the stories we have across Africa from Frontier Africa Reports. Thank you for listening.
Thank you, Justina. We have now come to our guest speaker session. A quick profile. Mr. Adebusiye is a principal at Sahel Capital's Agric Business Managers Limited, a food and agriculture focused private equity firm which invests in mid-sized agric businesses. Sahel Capital oversees $65.9 million in assets through its debut fund, the Fund for Agricultural Finance in Nigeria. Mr. Adebusiye is also the Technical Assistant Facility Director at the firm, managing a TA grant of $4.2 million, which is deployed across the fund's portfolios companies. He has worked for over 12 years in operations and private equity, and has worked with multinationals including Procter & Gamble and the Syngenta Crop Protection AG. DG is on the board of directors of L&Z Integrated Farms and Costrais Farms Limited. He holds a master's in business administration from INSEAD Business School and has a first-class degree in chemical engineering from Obafemi Awolowo University. Mr. Adebuseye will now be speaking to us on food security, meeting the demand of 200 million people. Good morning, Mr. Adebuseye.
Good morning, Dozie. Can you hear me?
Yes, we can hear you clearly.
All right, thank you very much. And hello, everyone, and good morning. It's always a pleasure to be at the Vetiva breakfast meeting, and thank you for inviting me again. Maybe one thing I can add to what you just said now is that Sahel Capital also just closed on a new fund, an impact fund, in addition to the one we just have, and it's going to be investing in also in the food and agriculture space, but this time broadly across sub-Saharan Africa. I guess maybe some other time to be interesting to say more about what we're going to be doing with that fund. But to the topic of today, food security meeting the demand of 200 billion people. Let me start by saying that despite the imminent challenges that we all know that we face with food security in Nigeria today, there are still inherent opportunities that will only increase over the next couple of years, and they'll become more obvious as you know, in the next few months and years why this is so. One thing I usually tell people is that if you think that feeding 200 million people in 2021 is hard, then you should try feeding 400 million people in 30 years' time, you know, with the same scarce resources that we have today, whether or not rightly managed. It's a discussion for another day. And let's not just forget that it's not about feeding, but feeding well. So we are talking about proper nutrition in addition to adequate food supply. If we look at the global food system today, there is gross inefficiencies, and that is having major ripple effects across the entire world. Over the next 30 years, the world is going to be adding 2 billion people. What that means is that we're going to be having 2 billion additional mouths to feed, 2 billion additional mouths to house, and 2 billion additional mouths to clothe. And whether we like it or not, those are not the only products or services that are going to be required by all these people, because a good chunk of that number actually live in developed countries with very high disposable income. And what that means is that their need for adventure, medical services, transportation, and the likes will still have to be met. So even if I look at the host of people that are listening to me today, I'm sure many of us will be wondering when I'm going to have the Walt Disney set up a theme park, somewhere close to Lagos that we can visit, or have very lovely transportation systems across the entire country, just to put less pressure on us. Whether we like it or not, also all these infrastructures, all these demands, they're all putting pressure on the scarce commodity that we have, which is land and water. And these are also the key factors for agricultural production. Global warming is also not helping matters at all. There are floods wiping away agricultural lands. We have fledgling rainfall patterns, which are affecting yields, crop yields, and even livestock yield and productivity as well. Global warming is also leading to new prevalence of pests and diseases that did not exist before. And we are trying to figure all that out and the impact they're having on crops and livestock. So if you ever thought that global warming has nothing on Nigeria, then you have to think about that again, because there are broad ramifications for what is happening globally today. So what we are seeing is that developed nations are actually looking to other parts of the world, Africa, Latin America, Asia, for their food supply. And that will only pick up pace in the coming years. It's not going to slow down. But nevertheless, we still have our own problems to deal with here in Nigeria. So let's come back to Nigeria and look at what the situation is here. Like I mentioned earlier, our population is growing and growing very quickly as well. The expectation is that we hit 400 million by 2050, and we will become one of the largest countries in the world. And while we are not facing the declining capacity or potential to supply our food requirements, there is still significant starvation in Nigeria today. And I'll explain what I mean by that. Today, Nigeria is one of the top 10 countries with the most arable land in the world. We have 34 million hectares of arable land. And, together with us in that top 10, we have countries like India, we have China, US, Australia, Brazil, and a couple of others, Russia, and a couple of other countries. But the funny part of that story is that if you look at the top 10 agricultural producing countries in the world, Nigeria is conspicuously missing. If I put that in context, what it means is that in that 10 agricultural producing countries in the world, you will still find the same 10 countries that have the largest arable lands in the world. You'll find China, you'll find India, US, Brazil, Russia. You'll find them on that list. So the question is, why is Nigeria also not on that list? So I'm sure you understand what I mean now when I say Nigeria does not suffer from a capacity or potential to supply its own food requirements or even become a net exporter in some particular value chains. But the reality is still that Nigerians are starving. According to a research that was done in 2019, the average Nigerian household spends about 56% of their combined income on food. And another recent research, which we all probably have seen, actually shows that an average Nigerian spends 101% of wages on food. What that means is that an average Nigerian borrows to eat. If you extrapolate that, you can understand how that does not end well for anyone, because it's a continuous cycle of poverty, of having to borrow. I mean, you can borrow to do things, but when you have to borrow to eat, then it's a major problem. And the reasons are really not far-fetched. We all know food inflation has been on the rise. It's starting at about 22% today. However, what is a bit harder for many people to crack is why are these problems? Why are we having this significant issue in Nigeria? There are actually short-term and long-term supply constraints that are actually leading to this food inflation. If I look at the short-term supply constraints, we have issues around bad weather, lack of irrigation that limits our cropping to once every year. We have significant security challenges across the country. There are changing policies, and all this impact the agricultural value chains. Then in the long term, we have some major constraints as well, and that is really around the loss of land, majorly farmland, to global warming, which I talked about earlier. We have issues of flooding, we have droughts, we have extreme heat, and these are all leading to soil degradation, and these are reducing crop yields. As a result, what is happening is that farmers are switching to other means of livelihood, and you can't blame them because they have to feed their family, they have to feed themselves, and to do that, they have to now take farming just as a side also as another means of income. And like every other thing that does not get the right attention that it deserves, we begin to get abysmal results, from that as well. Over the last 4 years, we have an investment in a rice, an integrated rice business that sits on about 2,500 hectares of farmland. And what we've seen happen over the last 4 years is around October, there's always a peak flood experience, and the farm becomes flooded. There was a year in which we lost every single crop we planted on that farmland, and you begin to think of the extreme cost that it adds to your cost line, where you now have to think of building dikes around 2,500 hectares of farmland. And I'm not talking about small heights. I'm talking about 7 to 10 meters wide piece of dirt that is about 26 meters high, building that around your farm just to prevent water from coming in. Those are costs that you never planned for, but then you still have to incur. So these are some of the impacts we are seeing, from the long-term constraints. So the question then is, what can we do to ensure we can still feed our increasing population, which I believe is the question most of you are, you're thinking of. There are also two dimensions or two approaches to this. There's a short-term approach and there's a long-term approach, in my opinion. In the short term, the first thing we have to deal with is how do we address the sprawling security challenges we have in the country today? Because the reality is that there are regions of the country where, that are under the control of bandits. And farmers need to pay to access their farmlands. They need to pay to harvest from their farmlands. And some ultimately just avoid going to the farms because there's also the risk of kidnap, and other things that we all know about happening in the country today. So a lot of those farmlands are left fallow and, nothing is happening on them. And so you can imagine farmlands that are left fallow and nothing is happening on them. That is lost to the country, that is lost to the farmer, and that is lost to you and I, because those are the things that are adding to the cost of food today in the country. The second thing is we need to build innovation irrigation systems and then create an agricultural ecosystem around these schemes. Today, like I mentioned earlier, we only grow one crop every year. Well, mostly across most parts of the country, we only have one crop cycle. Whereas in other countries, rice, for example, you have people that have 3 rice cycles every year. To paint the picture of why this is bad for us, in any manufacturing operation, if you're doing less than 40%, capacity utilization every year, you can imagine the money you're leaving on the table. It is not good for business. It is not good for everyone. But that is what is happening in Nigeria today. And it seems that we are all okay with it because nobody seems to be looking at that. How do we make irrigation available in innovative ways in strategic parts of the country, just to make sure that we can continue all year round farming? What that also helps is not just in terms of making water available for all year round farming. It also helps us to be more creative in how we approach some of the global warming adverse effects like flooding. I'll give an example. So at the rice business I said we invested in, one of the things we've done is we've built a massive irrigation infrastructure that we have like a 7-kilometer primary canal, and then more secondary canals that now feed the rest of the farm to provide water to the rest of the farm. When we realized that the farm keeps getting flooded at a particular period of the year, we decided that we need to come to a point where we get all our crops out of the field before that peak flooding period. And what that means is that you have to stop planting latest by May. Now, if you are only dependent on rainfall, there's no way you can do that, because that is just when rainfall is beginning to get to critical mass that makes sense for planting. But what we do is we start planting around November, December. We plant all the way to May, and then we stop planting. This is the next best optimal solution. The best solution is for us to keep planting all year round. But at least because we have the irrigation infrastructure, it's easier for us to shift our cropping cycle to avoid the peak flooding period. And not just building this irrigation system, we have to think of how do we create an agricultural ecosystem around that? How do we make sure that around those areas, you create some form of intensification, you create a community around there. So you bring in things like, inputs, things like, manufacturing ops, you create all those things in those ecosystems that makes it a lot more efficient for both farmers and for producers to get the maximum benefit from that setup. Then productivity improvements. This is something we all know about. How do we increase productivity across our key crops, in the country? Today, we are still lacking, the rest of the world in terms of our productivity. And then, of course, the last point from a short-term point of view is we need to make a connection between primary agriculture and manufacturing. What we've seen is that as you move down the value chain, you expand value. There was a time when I was working with Syngenta, we were doing some work on the potato value chain, and we realized that the value of potato from the farm gates, if you sell at farm gates, to if you sell as French, the value actually expands 20 folds, meaning that you can increase value by about 20 times if you move from just selling potato in the field to selling French fries on the shelf. And that is what we need to do across.
Hello, Deji, can you hear us? It appears that we may have lost you. We appear to be having technical issues with Deji. While we work on getting our connection back to him, if you do have any questions, you may drop them in the Q&A box, or you may hold on to them while we work on getting our connection back. Thank you.
Hello?
Hello, yes, you're back with us. You may continue. Thank you.
Yeah, sorry about that. My internet dropped. Okay, so as I was saying, I was talking about the train ops, which like I mentioned, is extremely critical. So now, for sake of time, in the long term, what do we need to do? We need to think about agricultural policies. How do we make them, consistent and non-partisan? The reality today is we've seen a lot of movements in terms of agricultural policies, in terms of rice, the borders were closed at some point. There was a ban on importation of milk. There was the time there was going to be a ban on importation of maize. This all affects investment choices and decisions by investors. So it's extremely critical. And then the last thing in terms of the long-term outlook is we need to build a circle of competence and become dominant in a few value chains. I see us in Nigeria trying to become masters in a lot of value chains, but we need to become global leaders in a few value chains where we have competitive advantage and direct our scarce resources towards such value chains. It includes value chains like cassava, like rice, cowpea, ginger, oil palm, sorghum. Sorghum, we're the largest producer of sorghum in the world, and sorghum is a good substitute for for barley in the production of beer. Cocoa is another example where we are failing grossly just because we don't have policies that helps to ensure quality, and hence we are selling at a discount globally. So we need to focus R&D, extension services, subsidies on making these sectors highly productive. The reality is that importation is not our problem in the country. It is actually lack of local competitiveness. If we are competitive, import will be too expensive, and we'll begin to make sense of what we're doing locally. And our goal should really not be self-sufficiency, but it should be global domination in these few value chains. I'll stop here. All that I've said actually clearly just indicates that there is enormous opportunity in the food and ag sector. And it will become more apparent in the coming years, but there are challenges today that needs to be dealt with. And I think those are the areas where a lot of people, including us, and I'm sure everyone around the table, we are thinking of creative means in addressing. I'll stop here and I'm happy to take questions.
Thank you for your presentation. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we will unmute you and give you an opportunity to speak, or you may utilize the Q&A box and we will respond to your question. I see Onyeka already has his hand up. Please unmute Onyeka so he may ask his question. Thank you.
Hi, Chibuzi, can you hear me?
Yes, we can hear you.
Okay. Thanks for the presentation, DG. I have just two questions for you. The first one was you mentioned some supportive agricultural policies from the federal government, such as the banning of importation of maize and milk. At the same time, I happen to know that we some of these changes in policies have made some investors a little jittery because the VUCA factor from investing in Nigeria has risen significantly. I want to know in your opinion, which is more important to sustaining agri investment in the economy? Is it stable agricultural policies or supportive agricultural policies? And then secondly, I want to know what role you think technology can play in improving the food security issues we have in Nigeria.
Thanks, Jeremiah. For your first question, I didn't get, you said, is it supportive agricultural policies or what?
Okay, so you talked about some agricultural policies that have supported agri investments in the economy, such as banning of maize importation, milk importation, and some of the other things. At the same time, we've been seeing a lot of changes in policies, both in the agriculture space and in the broader political landscape. And I happen to know that it made some investors a little jittery about coming into the Nigerian investment space. Now, I want to know, in your opinion, which is more supportive of agricultural investment, which is going to be more supportive of agricultural investment, changing policies that will ultimately support agriculture, that is ultimately beneficial for agricultural investment, or stable agricultural policies. I don't know if you understand the question.
Yes, I do. Thanks for that question. By the way, let me clarify that I was not saying that those policies were positive. I was giving examples of how we've seen some more or less knee-jerk change in policies over the last couple of years, and it's not been good for anyone. Trust me, it's not good for anybody. It's not good for the investors. It's not good for the farmers. If we're going to shut the borders, for example, let us know why, let us know what is underpinning it, and let us know that it's going to be for the long term. I mean, I'm not saying it is good or bad, but like they say, an investor is not bothered about a good or bad policy. So for me, we need to think beyond the short term, whether gains that we get from some of these knee-jerk policies, and we need to think big picture. Let's leave the forest for the trees. What are the things that we guarantee long-term productivity improvement in the country? What are the things that we guarantee us to be, we enable the country to become more competitive locally? And it's not the short borders that we do that. It is not a ban on importation. Even if there's going to be some limitations on imports, it has to be worked towards how does that enable local production. If that is not clear and if it is not consistent, then it becomes a problem. It's just a knee-jerk reaction, and it's only going to create problems. I mean, the food inflation actually skyrocketed after the borders were shut. And so we all know that was not good for anybody, and we've not been able to bring that number down, even though it's been going down in the last 1-2 quarters. But it's still been a big problem because that spiked food inflation. So yeah, I agree with you that we can't just be changing policies. Policies, they need to be consistent and they need to be long-term, which is why I put changing policies on the long-term solution. It can't be a short-term fix. It has to be something that we want to build out over the next couple of years. And to your second question, the role of technology in agriculture, I honestly believe that is the only way we can catch up today. If we don't employ the use of technology, and technology does not just have to be, information technology. It could also even be innovative technologies in agriculture itself. For example, how can we use innovative processes to build our own seed systems in the country? How can we leverage technology and innovation for irrigation solutions? How can we do that for to create precision agriculture? These are all areas where we need to embrace technology, and if we don't, we will still continue to, crawl while the rest of the world is already running, flying at the end of the day. So yes, I agree with you that technology has a big role to play, and we need to, all look more into that.
Okay, thank you very much.
Yeah.
Thank you, Onyeka, for your question. I have 2 other questions as well. The first one is, do you see the reduced herder farmer population as a structural threat to food security in Nigeria in the long run? And the second question is, what sector would you advise investors to go into in the agri sector? We have seen government intervention schemes such as the outgrower scheme. How effective have these policies been?
All right, thank you. That first question is, is always a tricky one to answer around the elder farmer population. But I'll tell you my own opinion. The elder farmers have been around for a very long time. It has been a very informal sector. And, I once sat down, because we have investments in the north. So I once sat down with a northern entrepreneur who has a significant business and is from the part where, there are a lot of elders. And one of the things he's told me stuck with me for a long time. He said, Deji, do you think that these cows that walk from the north to the south, do you think the cows are happy to be walking that much? He said, because it affects even their own productivity. So really, the reality is nobody wants to be walking that long. And the way I see this playing out is that we have to formalize that sector. To the extent that we can formalize the sector, and that is actually making sure that there is a viable business that can come out of that, then it becomes what is seemingly looking like a threat today can become a major opportunity tomorrow. And that is how I'm thinking about it. And the question I'm asking is, what can be done, to formalize that sector, make it a business sector, let the people involved see the landmine they sit on, the potential cash they sit on. Because these cows, if you can situate them in one place, give them nourishment, beyond the grasses they just eat for free on the road, proper feed and nutrients, and they stay in one place, you can boost the milk yield significantly, and that can contribute significantly to the milk production in the country. It's good for the farmer themselves because number one, they don't have to keep walking around the old place. Number two, there's more income for them. Number three, there's higher milk production for the entire country. Number four, it crashes our cost of milk importation into the country. So it's a win-win for everybody at the end of the day. But we have to think of how do we formalize it and make it a business enterprise and make them, see it as it is. The second question, in terms of I think is the advice on what sectors to invest in. It's all ultimately also depends on what you have an appetite for. Some of the things I mentioned earlier, there are areas where if you look into, there are significant opportunities there. So whether, and I won't go into specifics, but on a broader term, again, I'll mention, if you think around irrigation solutions, whether it's in terms of renewable energy for crop production, there are opportunities there, just to make sure that, farm, and we've seen some people pilot things like that, and there's willingness from the farmers to pay for it, because it's them being able to produce a second cycle of crop when they have not been able to before. And even the ones they are producing that are faced with drought, they are seeing improved yields from them. So there is actually a cash flow opportunity, in that enterprise. The other is in terms of productivity improvement. So whether it's in terms of providing small scale mechanization support to farmers, or in terms of activities that demonstrate improved productivity for farmers, whether it's in terms of inputs, seed systems, and the good thing about the seed system in Nigeria today is that they recently passed, the varietal protection law, which helps to actually invest in R&D for seed production in the country. These are all areas. There's also increasing consumption of protein, which is poultry, but one has to be careful because, it's highly linked to the maize value chain, and the volatility in the production of maize in the country also affects, your output in terms of the poultry. So the bigger scheme, I would say that whatever is impacting productivity, whatever is making irrigation available, for farmers, and then manufacturing, of course, processing of these agro products into finished goods. These are all areas that I think would be interesting in the coming years. And then you talked about the government interventions, like the outgrower scheme. How effective have the policies been? I think it's a good intention. I think there have been several inefficiencies in how it's been implemented, and I think they are learning in the process of, how they are doing it, how they are making cash available, to the farmers. But what I'm seeing is we are seeing a lot more outgrower programs that are being led by independent people. And when I say independent, by the private sector, but they are taking advantage of these government schemes in a positive way. And as a result, they are growing production output. So some of our portfolio companies benefit from it, but even some companies, some intermediaries we see in the market are benefiting from that, in which they're organizing farmers into cooperatives, they are providing them with inputs, that they're getting access to the anchor borrowers program, the loan to help finance this farmers. And the process the banks have put in place now is making it a bit more difficult for farmers to just take the money and run. There's a lot more monitoring happening, making sure that the farmers have there's a reason for them to want to pay back that money to the government. They all have BVNs now. So once you've taken loan once and you have failed, you can't get again from the government. It's just impossible. So like I said, there have been failures, inefficiencies, but I think there's the intention to correct and, rework these things to make them work.
Thank you for your response. We have now come to the end of our session today. We would like to thank Mr. Adebushe for joining us today and speaking on meeting the demand of 200 million. I feel it was very insightful for everyone that joined today. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank our participants for joining us today. We continue to encourage everyone to keep safe, and we look forward to having you join us again on Monday at 8:30. Good morning.